Hi, this is Laura Brown with the Rosko Group at Keller Williams Community Partners, and I'm speaking with Drew Huggins from Thrive Mortgage, and he's going to discuss their home-to-home loan program, which is a great program for people who are trying to get into a home without possibly selling theirs first due to time constraints. So, yes. Drew, what is the home-to-home loan, and how can it be used in the offer process when you're trying to make an offer on a home?
Thanks, Laura. So the home-to-home is a proprietary Thrive-only program. It's not a bridge loan. We go 100% financing on the home that they're going to buy. We don't put any type of lien or anything against the departure residence. We just have to show through a broker price opinion on the home that they're selling that there's going to be enough equity for them to put 5% down on the new home once they convert. So it's a two-step process. It's 100% financing, interest only for 6 months. And then, so this is ideal for somebody who can't afford both payments or needs to tap into the equity of the existing home to put down on the new home, or both. I've talked to my friends in the industry about this program, and everyone's kind of shaking their heads about how we came up with something that is so simple and elegant. With a traditional bridge, you would get an equity loan on the equity in the departure residence, and then you would use that to put down on the new home. So you'd end up with 3 mortgages, 3 fully amortized mortgages. So you'd have your existing mortgage, your second mortgage, the bridge, and the new first mortgage. With this, with the interest only, it's a lower payment than you would normally have for that period of time when you're going to have 2 mortgages. And the way the market is right now, most people are able to put their home on the market right before we close, because that is a requirement of this program, that the home be listed prior to our closing, and then sell the home very quickly. And in many cases, they're not even having that first payment on the new home.
Great. So what generally is kind of the cost to the buyer if they do have to tap into that loan? Let's say, for example, obviously, ultimately, our goal as a real estate agent would probably try to get their current home closed first, right? But if we're not able to do that, so what would the cost be to them? Like, what kind of closing costs are involved with that typically?
So because of the fact that this is a 2-step process, they are going to have 2 sets of title fees. That's why, like you said, we will try to avoid using it. So the many times that I've set up this program, probably about half of those times I've not actually ended up using it. So my advice is always working really closely with my agent partner and saying, hey, let's go under contract slightly longer on the new home, say a 45-day contract.
Okay.
We can go into contract in clear conscience, knowing that it's non-contingent, because we have the home-to-home to fall back on. But ideally, we get the home listed as soon as they go under contract on the new home, get their home sold, and then just do it as a traditional mortgage and just do back-to-back closings. So then that way they only have the 1-step conventional financing. Now, the times that I've set it up that I've ended up having to fall back on it, it's easy enough, because we're going to know in the first week of that listing of the old home whether it's going to sell quickly. And so that's plenty of time for us to fall back on the home-to-home program and rely on that one. And then we just close it with the home-to-home, and then they close afterwards on the sale of their home, put up as little as 5% down on the new home, and then we just convert it to permanent financing.
So I've used the home-to-home loan program with several of my clients, and it's been a great package. For more information on this program, please contact Drew Huggins at Thrive Mortgage. And for more real estate tips, please subscribe to our YouTube channel, the Rosko Group at Keller Williams Community Partners, or contact us. Thank you so much, Drew. We appreciate your time. Bye.
Bye.